Let's talk about stablecoins. These are tokens that are meant to hold their value steady. The most common form are ones that are linked to the price of the dollar, right? If the price of a token is always $1, that's a stable price, as opposed to Ethereum and Bitcoin, which are going up and down a lot. There's obvious uses for having a token that holds its value. Especially when market is crashing, it's a nice thing to have. This is one of the biggest growth areas in crypto, and there are many different types of stablecoins. My interest, as always, is in decentralization. I want a decentralized stablecoin. That means a stablecoin that the government cannot and should not see a need to regulate or mess with. So now a ton of these are launching. Some are new, some are coming, some are out there. And what are the ones that are best where we can put some money, stable, and then you can also take these, lock them in a smart contract and earn interest, right? Instead of keeping your stable dollars in Bank of America and earning 0% interest, you could lock it into a stable coin, put it in, I'll talk about the different places you can lock it up, and earn interest anywhere from whatever, 2% to 20%, and it could be volatile and move around a lot. Now, before I go into all the coins that I want to talk about, there are others out there, maybe some I haven't heard of, maybe some that are coming, and some of you are going to want to post, hey, what do you think of this one? Let me first tell you my criteria of ones that I like so that you can at least put it through that. And if you find one that matches these criteria, then please post it below. I can't keep track of all of these, so you may find one that's awesome and you want to point it out to me and the other people who read the comments. That would be great. But here's the things I look for. First of all, has it launched yet? I am not able to determine from a white paper or whatever else whether some stable coin is going to hold its peg. I don't know. So I wait till it launches and I wait to see if it holds its peg. If it holds the peg right from launch and consistently for at least 3 months, okay, that's something. But still, I want to see more. I want to see if it holds its peg during a market crash or turmoil or even a market boom. Want to see if it holds its peg during extreme volatility. In other words, if everything's very calm and boring for 3 months and the stable coin is stable, that's too easy. I want to see it tested. So we just had a great test a couple weeks ago, right, when everything fell. And that tells a lot. So if something just launched now, we would have to wait. Okay, so has it launched? Is it stable? Has it been tested? And also, is it decentralized? I am no longer interested in stable coins that are the regulated. So, for example, USDC is a stable coin, right? It's backed by this company Circle. Coinbase uses it. It is fully regulated, fully backed by US dollars. They're doing everything they can to be the government's friend, right? Visa is testing it, working with it for transactions. And I have liked it because I have an account at Coinbase. I could exchange it 1-for-1 for dollars for no fee. It seems easy and reasonable. And I still like it, but I am concerned that the government is coming with regulation. And I don't know what that means. So USDC is doing everything they can be regulated. So maybe it's fine and it doesn't mean anything and I shouldn't be worried. On the other hand, so you can take USDC token and lock it into compound finance and earn interest. Right now, the interest is low. It's only 2.5% or something. It was 10% consistently for a long time. Whatever. You can also lock it in Aave, which I like. There's a lot of places too to lock it up. But if you know how to read Solidity contracts, smart contracts, and you can determine that something is really safe, then God bless. I can't do that. So what I have to do is wait to see if it's been around for a while, see that everybody else thinks it's working, smart people think it's useful, and so on and so forth. So for me, Compound and Aave are good. I don't even mess with Yearn Finance because I don't know. I'm too scared. They might be totally fine. Anyways, but when it comes to regulation, will the government be like, well, you can't lock it in compound finance because they don't have KYC and that's illegal? And I don't know what kind of turmoil is coming. So I'm concerned about the regulated stablecoins. If I want a regulated stablecoin, I have USDC. I don't want any more. So I'm only looking for decentralized ones at this point. So the other thing that is really important, can't stress this enough, and I've mentioned this a while ago, as far years ago, I've been talking about this, that at some point, the government is going to drop the hammer on the head of Tether. Tether is the biggest stablecoin. I just got some numbers here. Tether is, let's see, 64 billion. And I think the grand total, there's about 100 billion in stable coins. And Tether is about 70% of that. So 65 billion right now in Tether stable coins. That's a lot. It's the biggest by far. It is not regulated and it is not complying. It's not even like it's not regulated, but if the government looked at all their books, they would be happy. No, I think that the collateral they have backing the Tether, they have collateral. I think they can defend the peg. And most people don't even give it. Most people who use Tether are just holding on to it for 10 seconds. I think the average Tether turns over like 3 times a day. Like people are just zipping it around. Nobody cares if it's backed or not. And in times of turmoil, it usually goes over the peg because more people want the Tether, you know. So if it wasn't for the government, I'm not that worried about Tether. But I am worried that the government is worried and that they're gonna do something about Tether to bring it into their regulation world. And I don't know what they're gonna do. You know, what they could just like say, oh, this thing's illegal and no one can touch it anymore, and there'll be huge turmoil in the market, like crazy. Or maybe they'll handle it really intelligently. I don't like to assume the government's going to do anything smart. So that's, you know, maybe they will, but I'm not. I don't want to bet on that. So there's this big meatball hanging out there of government regulation coming after Tether. And when they do, and they've been signaling, there's announcements every day about government regulating and concerned about stablecoins, and different agencies around the world issuing press releases every day about how this is coming, and then specifically sometimes mentioning Tether, which obviously they would come after Tether. It's the least regulated and the biggest. So what happens when they come after them? This is a concern both for the whole market. You know, maybe they come after them and everyone's like, oh shit, we got to get out of Tether, and they just go into all these other stable coins and everything's fine. Or maybe they go into ETH and Bitcoin and those go way up and it's great. Or maybe everybody's like, fuck, and tries to just get out of crypto and liquidity dries up and everything crashes huge. I have no idea, but you know, you got to be aware. And also, when is this coming? I've always feared, I used to fear that we would just wake up one day and it would happen. But I'm glad that's not the case. They are telling everybody it's coming, it's coming, it's coming. But we must be getting closer because they're talking about it a lot. And it's gonna happen in 2021. I think it'll happen, you know, before the end of the year. Probably in the fall. So, and so some of the things that could happen, you know, when you have these automatic market maker pools, the way they work is you have 2 tokens, right? Let's say you have Tether and USDC. And the value of the 2 pools should stay equal. So if the value of USDC goes up, you end up getting more Tether and less USDC to keep them in balance. So bottom line is, if Tether goes to 0 and you're in a pool, you're gonna end up with all Tether, okay? So, and these curve pools, you know, where there's 3 different, you know, or 4 different dollar stable coins in a pool, tether goes to zero, and I'm not saying it's gonna go to zero. I don't think it goes to zero. In crypto, the stupidest, worst tokens don't go to zero, so I think that's a tough thing to predict. But if it starts falling, what happens is you end up with a lot more of that token in these pools. So that is a concern. And then, so there's these, so there's these curve pools that have like 3 or 4 different stable coins, and all of a sudden they got a ton of tether in them, which is in trouble. And, my Wi-Fi that I like, Yearn Finance, does a lot with the curve pools. Maybe that starts screwing up their returns. I mean, I don't know what happens, but you got to be scared. And then I was also reading about El Salvador, what they're doing with Bitcoin. But there's a whole scheme with, and I don't know the details of it, but it's, they are allowing people to convert Bitcoin into dollars, but they're using a lot of tether, right? Tether's the biggest, it's 70 billion. So a lot of things will get fucked up if tether gets fucked up. Maybe the government will hold it nicely and not want everything to get screwed up. Or maybe they will want to and that won't work. But anyway, so that's the first issue, okay? So now, what do I like? Let me just see if I got if I went through everything here. Yeah, okay. So now I have like the original decentralized stablecoin is DAI, D-A-I, from MakerDAO. It is over-collateralized with ETH. Oh, sorry. Originally, it was over-collateralized with just Ethereum. But now it's over-collateralized with lots of different collaterals, some good, some not as good. And now it's 50% collateralized by USDC. So here's another regulation issue. So if you're concerned about regulation, and like I said, maybe they say, oh, USDC is fine, but DAI's not fine because DAI is not regulated. And maybe, and if the collateral is USDC, the government says, well, we don't like DAI, so now they can attack DAI by saying, oh, you got to get all that USDC out of the DAI protocol, the MakerDAO protocol. So listen, again, I don't want to, I look for vulnerabilities. I feel like if there's a vulnerability, someday it will get attacked. And so I like to be careful and conservative. I don't know that any of this is going to happen. And also, the government's first thing is probably to deal with tether, and then that gives us an idea of and then the next thing they would move maybe to USDC, and then maybe to DAI, and I don't want to make you think I'm panicked here. And I hold, my most held stablecoin probably is DAI, I think. I don't know. But, I'm not bailing out of it, but you need to be aware of these risks because as we learn more, things change. So DAI is 50% USDC collateral, backed by 50% USDC collateral, and USDC is regulated. So is DAI really that decentralized? Also, DAI is not algorithmic. There are things called algorithmic stablecoins, meaning they maintain their peg just by math and algorithms that automatically adjust interest rates or whatever scheme. There's a million different ways of doing it. DAI maintains its peg by people voting every week on what the interest rate should be. And it's worked and it's held its peg, but that's also, if it requires people to make changes, theoretically, the government, that's another attack vector. The government could come in and say, well, get all these people, you better vote this way. And I don't know. I'm not as in love with DAI as I used to be, which again brings me to the question, well, what stable coin is the best? Now, I have a favorite, but even that has problems. So there's one called RAI. And by the way, I'm going to get to places where you can talk about places where to earn yield. I know a lot of you just care about that, so we'll get there. So I like RAI. RAI was the idea where they saw this problem with DAI, right? Which is now backed by USDC, and said, we want a pure system. So they did two big changes. One is only backed by ETH, okay? And I like that because if you're on Ethereum, You believe in ETH, and that's the best collateral. It's the safest collateral. Anything else has another trust or risk factor to it, especially, obviously, USDC. So RAI is only backed by ETH, over collateralized. So in other words, if there was a problem with RAI and it was not working or whatever, you could just, and the whole system was going to shut down, you would get all your money back in ETH. You know, you have real collateral, over collateralized. So I feel safe holding it. And so what were the two things? Oh, so the two things are it's collateral's only ETH. The other thing is it doesn't have people voting on interest rates. It is controlled. There's something called a PID controller. It's a system for keeping things stable that actually PID controllers is an engineering thing that's existed for a long time. You know, like, I think like, you know, whatever, engines from when they originally even had steam engines on how they stay stable. And I don't know the engineering of it. If you look up PID controllers, it's been around for a long time. And they use that math, that type of system to keep the peg stable. And it's not pegged to a dollar. So the government can't attack RAI, right? The collateral's ETH. The peg is maintained by a math pre-programmed PID controller, and it's pegged to just a price of itself linked to the dollar, but it's not like $1. Right now it's like $3. And basically, I made another video. I don't want to go too long on how it works because some of you may pass out, and it is hard to explain, but it's been working. It's stayed stable. It's not one of these, some of these stable coins like literally just hug their peg, $1 constantly. And as soon as it moves a little, ARBs come in. RAI moves a little bit more off of its peg, but stays at it, and it's stable. It's definitely stable enough for me. So I love it. The only problem with RAI is that, first of all, it's really hard to explain. People don't understand it. People don't get it. I don't know if we're doing the best job explaining how it works. And so the amount of RAI issued has sort of been declining. The amount of capital in Reflexor is the name of the organization that is running this. The amount of capital, the amount of ETH going into back DAI is going down. So the adoption, it started out with really good adoption day one, like people were sort of excited, but people have been leaving. So I'm not that worried about my RAI because, as I said, it's just a smart contract and it's backed by ETH. And like, even if I'm the last one in the contract, I believe I get my money out. I mean, there may be some problems with if there's too few people where things break. I don't know. But at this point, I'm not worried about it, but I'm concerned that it's not growing. It's shrinking, actually, its adoption. I mean, that's not a good sign. It's early days and, you know, whatever. I'm not giving up on it, but that is my favorite, but it doesn't appear to be anybody else's favorite, or some people, but not enough. So, let's talk about where you can earn some yield. Okay. So first of all, there's a ton of places, and you may do your research and determine things are safe or somewhat safe, and you put a little money in things. The only two I mess with, well, there's three places I'm messing with: Compound Finance, Aave, and Uni Swap V3 as a liquidity provider. So first of all, Aave and Compound, like I said, I trust for a number of reasons. Should we get into that? I feel like maybe that's another topic. I trust those two. My methods for determining whether I trust something is, those have been around. They're two of the oldest, run by really smart people, great teams, never had a problem. Compound also is backed by like A16Z, you know, Andreessen Horowitz. If there was a problem, I think they would come in and sort of bail people out to keep it going. They have a ton of money, right, behind it, and they don't want to ruin their investment. It's sort of like whenever there's been a hack in a decent exchange or whatever, they bail out. Like the users don't lose money. because they don't want to lose users. They want to keep the trust up while they're working things out. So, especially with Compound, I think that's the deal. You know, I think they're pretty safe. Now, you can get higher yields with other places, but I think you're taking more risk. For me, a couple extra percent isn't worth it. And right now, the interest rates are pretty low. If you go look at it, it's like 2.5% interest. But you also earn, so if you lock in Compound, you earn your 2.5 interest. You also get some comp tokens, the token of the Compound finance, which you can look at as the risk asset, or almost like equity, you know, a stock for the Compound protocol. And same with Aave. You lock in Aave, you earn your interest, plus you get some Aave token. And it's pretty easy to do if you're on Ethereum and you have your wallet. These are things that, you know, if you're a beginner, I don't know, or you don't have that much time. But if you want to get into it, you get your ETH wallet. If you have a lot of money, you're probably going to want a hardware wallet like Ledger Nano that's connected to your MetaMask, you know, so you're protecting your private key and access. So if someone grabs your laptop, they can't just take all your money. You go to the, you know, Compound Finance. It's not that hard to figure out, and you supply or deposit, and then it's locked in there and you're earning interest. And then you don't get statements. You know, it's not a bank. You're not getting statements. So don't forget about it. Like, you're like, oh shit, I put money in there a while ago. Or which wallet is it in? And all this crap. You got to keep track of your stuff. There's a website called zapper.fi, zapper.fi, which if you put in your wallet address will show you where you have all your money. You got some in Compound, some in Aave, what you have for rewards. You got money in Uni Swap, and it shows it to you. Because when you lock it up, it's no longer in your wallet. So you go to your wallet, it says, oh, you have no DAI stablecoin. Because you don't have it, it's in the Compound deposit. So if you didn't write it down, or you don't go to Zapperify, whatever, you may forget about it, right? So you got to keep track of this shit. So those two are good. And then Uniswap. So Uniswap just upgraded, and I think it's worth, you know, again, if you're an expert and you want to spend some time here, you can provide liquidity on Uniswap. Now, I'm going to try to explain this. This is took me a while to understand. If you're lost, it's fine. That's normal. Okay, but anyways. So, remember I mentioned how you put money into two pools. And think of it this way. With Uniswap V2, if Tether, you have two pools that have you have a total value, and you're earning money on fees, so the total value is increasing, but minus the fees, it stays steady. Pretty much. I think there's also variables with that, but in general, stays steady. So if one token price goes to zero, is going down a lot, in order to stay steady, you need more of that token, right? Because the price went down, so the quantity has to go up. So if one token goes to zero, you end up with all of that token. That's like a risk factor. So, and the volatility can sort of mess up your returns. And so what people like to do, well, if volatility and something going to zero is a problem, how about I have two stable coins, USDC and DAI, and I'm supplying liquidity for those two. Well, now I don't have that volatility risk. Well, that's cool. So now you can go to Uniswap V3, and there's different fees. You have to take a lower fee per transaction. You can choose how much you earn by providing liquidity. You take the lower fee because there's less risk, right? So people take a lower fee. Now, as I said, with Uniswap V2, you put the money in and you have this, they call it, you're taking risk on the whole curve. If something goes all the way to zero, what happens? Or if the other one goes to infinity, you end up with zero of that token, price of infinity, right? But in V3, you can choose your range. You don't have, the range doesn't have to be 0 to infinity. You could say, you're trading DAI against Ethereum with a range of Ethereum of the price of 1,000 to 2,000, right? That means that if ETH goes to 1,000, you now have 100% ETH and 0 DAI. If ETH goes to 2,000, you have 0 ETH and 100% DAI. You still, if you put in $10,000, you have $10,000. If ETH goes to 1,000, you have $10,000 in ETH. If ETH goes to 2,000, you have $10,000 in DAI. You've set the range for your curve. Okay, so now with two stable coins, that movement is a lot less, so you can make a very narrow curve. And you can go, there's a website called tradingview.com where you can find some of these. I wanted to see what's the range, what's the historical range of RAI against DAI, right? Those are my two favorite stable coins. So I want to provide liquidity in Uniswap. Well, what range, Uniswap V3, what range do I do? And I can see the history and then pick a narrow range. Now with Uniswap V3, you earn more fees. The fees or the trading first goes to the liquidity providers who have the most narrow curve when it's within the curve. And like I said, with the ETH DAI, right? So I said from 1,000 price of ETH to 2,000. Well, if the price of ETH is at 2,500, you're not a liquidity provider anymore. So now you're not earning any fees, nothing's happening because it's out of your range. So when it goes out of the range, you don't earn any fees. When it's in the range, you earn fees, and you earn more fees the skinnier your range is. Right? I mean, I don't know what else to say about it. So, another place to earn some yield is to be a liquidity provider for stablecoins. Hope that makes sense. It takes a long time to figure this shit out, and you also can't really figure it out that well until you actually do it. And then what range do you want? I'm testing right now, and remember, it takes a few months of testing. I threw a tiny bit in. Like, I'm testing, what if I have a super small range and sometimes it goes out? Does that make more money than a little bigger range and it never goes out of the range? Right? But I'm earning less in fees because I have a bigger range. And I have all these different, set up all these different, RAI, and again, no, I did a lot of USDC DAI before I decided, now I don't like USDC, but still, I got these tests running to see which ones earn the most money. Now, if you're really good at math, you can probably do all the math and figure out the answer but I'm not. So I have to load it all up, track the results, and then look at what happened and then figure out what works. And I'm not trying to be a perfectionist here and do the absolute. I'm a passive liquidity provider. I just want to do something that's pretty good, and then once I know what's going on, then it's like, okay, I could put a bunch of RAI, DAI in this range and just set it and forget it. And it's good enough. And if I was active and had a more narrow range and kept adjusting it based on the market, maybe I could make more money, but I don't want to live like that, right? So those are the main options. And like I said, there's plenty more places where you can earn liquidity. Look at Yearn Finance. They pay higher rates in general. And I don't even know that it is more risky. Some of those are probably super safe, but I don't know how to figure that out. And I don't know that you'll get bailed out if there's a problem in Yearn. There was one problem with a DAI vault, and they paid everybody back their money. But they also said when they paid everybody back, they sort of said, we're not going to pay back anymore. If you don't want to lose money, get insurance. And then insurance is another thing to fucking figure out. So I don't want to deal with any of that. But there probably are some good deals there if you're smarter, or you can read the contracts, or you can, look at exactly what they're doing and determine that it's lower risk, whatever. But make sure you know what you're doing, right? It's not worth, to me, an extra couple percent to take on risk of total loss, right? If you have $10,000 and you're earning interest, it's just like, I'm less concerned about whether I'm getting 5% or 8% than I am that the whole 10,000 disappears. I'm more concerned about the 10,000 than I am the interest. So, okay, another one I like, which is interesting. I like, but not, I don't know. I kind of like, but I'm not, I don't think I want to be in it just yet. So, frax, F-R-A-X, is interesting. So they have a new model that seems to be working, and it works for UST on Terra, that I'll talk about next. So what they do, so frax, they have this thing, if I can explain it. Oh boy. So it's partially backed by USDC. Frax equals $1. If the price of frax is over $1, you can deposit. So its token is FXS. So there's two tokens. Frax is the dollar peg token, the stable coin. FXS is the, I don't know what you call it, the base layer risk token for the system. You can take FXS, put it into the frax system, and get a frax token. And you can do that for whatever the price of FXS moves around. But whatever $1 of FXS is at that moment, you can put it in and get one frax. So if frax is trading at over $1, you can get fraxes. So frax is trading for $1 penny. You can get them for $1 and then sell them into the market, which ends up bringing the price down. If the price of frax is below $1, you can trade in, you could buy them for below $1, put it back into the system, and get $1 worth of FXS token. So you just, for 99 cents, you got $1 worth of FXS, and then you could sell that to make your money back. Again, hard to explain, hard to understand, takes a few times, and a lot of these things, you got to play with it to get it. FRAX is the thing, and you could throw some money in there, and then you see. So this thing's been holding its peg snug as a glove, like OJ's glove. It's been really holding the peg steady. That system seems to work, and it's the same system that UST Terra is using. So that seems to work. But the key to it is that FXS holds some value. Now, as long as FXS is above zero, theoretically, it should work, because it's mostly just ARB people. They're not holding FXS for a long time if they're just ARBing it. But if FXS keeps going straight down, eventually hits zero, and then it doesn't work. So FXS has been going straight down. Not straight, but it's been sliding down consistently. I mean, I noticed today it was up 20%. But still, look at the chart. So, and what gives value to FXS? I don't know. So my concern with frax is I'm concerned about the price of FXS long term, and if that doesn't have a reason for people to hold, then I'm not sure the whole system works. So they may figure it out, and maybe there is a reason to hold FXS. There's a lot that goes on with the system. They have these, it's called AMO, automatic market operations. If you study this thing, I don't really understand what the hell that's going on with that. I don't totally understand. There are some theories on why FXS should have value. I'm not really getting it, and maybe no one's getting it, and that's why it's not going up, or maybe it doesn't work. I don't know, but I need to see and believe that FXX token has some real value, and I want to hold it before I believe in frax long term. Yeah, not saying it won't work or that it actually works already and I don't understand it, but right now I don't understand it, so I can't buy it. UST Terra. This one looks great. So the same model as frax. So you take the Luna token, which is the base layer token of the Terra Luna system. And if UST, their stable coin, is at $1, you can take $1 of Luna, put it in, basically get $1 of UST for $1, but the price is at $1.01, and you arb that and you make a little money. And same thing on the other way. If UST is below $1, if it's 99 cents, you can take your UST and pull out $1 worth of Luna. So the difference between this and FXS is Luna, I know why it has value. So Luna is the token that they use on the validators in the Terra system. There's 100 validators and they need so many Luna tokens and they earn a yield on it. So this is a platform also that's backed by a lot of real corporations that do a lot of money transmitters or payment processors and within South Korea. I don't have all the details. I tried to look up. I know I read something about it and I couldn't find it again. Like, who are these companies? But it has real usage. It has adoption. It's working with companies that make me think that there will be more usage and adoption. It's working. The UST has held its peg in that crash a few weeks ago. It came off the peg for a couple days and came back. So it was good enough for me. It came off a little bit, but they made some changes, which supposedly will make that happen less. And now that I understand the system, and it's sort of like frax, but where I said frax, the problem is the FXS token. Here they have the Luna token, which Luna, as long as the platform itself works and validators are earning yield, which they should, then I think this UST dollar token is great. And then you can take the UST token, and they have a protocol called Anchor, which is like their version of compound finance, right, or Aave. You lock it in, and you're earning 20% interest. Now, that 20% interest is because that's sort of a, hey, we're getting started promotional thing. Like, they're using their, I think, not 100% sure how it works, but it's something to the effect probably of like, they have a lot of Luna, that, the foundation, whatever, that I think they're sort of funding that higher rate now to gain adoption. In other words, that interest rate will not always be 20%, and it'll come down as the thing grows. But they are paying the 20% because, in a sense, they're liquidating equity in the system, probably liquidating Luna tokens in the system in order to pay a high interest rate, in order to get this adoption and get the ball rolling. And again, I don't know that 20% will last forever. Looks like it's going to be around for a little while. And it doesn't look like some crazy Ponzi scheme. It looks like it's just everything about, I think this system looks really smart. Now, the problem I'm having, and maybe if any of you have advice, how do you get to, so I guess I can get Luna from, there's some exchanges, but I'm not in these exchanges. There's like KuCoin and Binance. I guess you could buy Luna there. Probably this is how it's done. You got to buy it from some centralized exchange that's not my Coinbase, or I haven't checked even Coinbase, but I don't think they have the Luna token, or Gemini. And then you send your Luna to the Luna. Now you're on a whole new system, right? I haven't gone there yet. So also, this is new to me. Maybe I go there and then I hate it for some reason. But anyways, this is not, I can't use my Ethereum wallet and all my Ethereum stuff that I understand. Now it's a new blockchain. You send your Luna to a new wallet, and that Luna is like your ETH that pays gas fees, I'm guessing. But gas fees might be paid in the UST token, though. I don't know. Anyways, at least step one is probably sending Luna there, and then you buy some UST, and then you use that, Terra wallet to lock up your UST in this Anchor protocol, and it's a whole new world. And I don't know how to get on that world. Maybe I need to sign up at a new exchange and buy Luna. I would love it if there was a decentralized way to just send Bitcoin or Ethereum to something that would convert me over to the Luna platform. If anyone knows of something like that, where I can just send ETH and convert it to Luna and I'm on the Luna platform, that would be great. Sort of like what Ren does. I wonder if Ren is connecting. Ren, I loved Ren, but it just so stupid. They drive me crazy because they should have been focusing on just BTC on Ethereum, and they had to connect to every useless chain that nobody needs. And now they're probably, all they want to do is connect to every chain, and they're probably not connected to the one chain I want to get to, which is Terra. Maybe they are. Haven't looked. So anyways, that's where I am with UST. But this thing has volume. There's a lot of, how big is UST? I've got a list here. The biggest ones is, so Tether, 65 billion. USDC, 25 billion. Binance, they have a dollar token, and I'm not interested. Binance is like, you got to use Binance, you got to be in Binance, and it's just, Binance is another one that I worry someday the government comes after, and it's not decentralized, and when I was messing around with Binance, maybe if I had a VPN and was like, you know, pretending I'm not in the US, it would be a little better. I don't know, and I couldn't even, it's a little shady. I don't know. It's not for me. It's not for me. Might be fine. I love CZ, and I believe that Binance will probably do all right in the long run, but I'm just not messing with it at this point. So there's the Binance dollar is 10 billion of that. DAI is 5 billion. Fei protocol, 2 billion. Fei is one that launched with a ton of fanfare. Everybody was all excited about Fei, and they threw in tons of money. And I'm always, whenever someone is excited about something before it launches, it always flops. And so Fei was just another one of those. Way off the peg for a long time. They had to make a ton of changes. It's come back to its peg. It's back to $1. It seems to be working. But I need to see this. They need to survive some turmoil. They finally got it to the peg after struggling for a while. Will it stay on the peg? I'm not, and I don't understand Fei. I don't get how it works. You know, not that I've studied it that hard, but I don't know. So I'm not messing with that one. Okay, and then Terra we have is almost at 2 billion as well. So that's pretty big, right? Terra is one of the biggest, the UST, and it only launched, I don't know when, but it hasn't been around for a while. It's really growing fast. Then there's Paxos. I think that's another, US regulated one. HUSD. I don't know what that is. That might be Huobi, which, if that's Huobi, that's a Chinese exchange, and China's coming after those things. I wouldn't get near it. Plus, Huobi, even without the government attacking it, I wouldn't get near that thing. I don't trust it. Neutrino dollar, never heard of it. Gemini. So I trust Gemini, but it's at $200 million. If you want that, you go to USDC, is much bigger, right? Although, I don't know, maybe it's better to be in a smaller one. You're under the radar. In other words, if the government wants to be a pain in the ass, maybe they go after the big guy first. Maybe they go after the small. I don't know. But anyways, that's Gemini. Synthetics has a USD. That's 147 million. That's, whatever. Now we're into tiny ones that I don't, and Synthetics I never understand. They've been doing great. God bless them, and and I follow Kane, the founder, on Twitter, but I don't invest in it because I'm always just like, it's always just confusing to me. Not, Tribe, I don't know what that one is. Frax is only 135 million. RAI, my favorite, is only like 35 million. It's tiny, which is my concern for it, and it's not growing. There's another one that I saw, LUSD, which I read it and I was like, okay, this one's really cool. And I do not remember how it works right now, actually. But my concern with that one is it's a bit of a circle jerk. I don't know if that's the proper phrase, but it's like one of these things where you mint it and then you lock it in their own staking thing, and they pay interest to that. So it's like everybody's within the one protocol. Do you know what I mean? For something to me to feel is working is people are taking the dollar token and either using it or locking it in all these different protocols, and it's all over the place. LUSD, and granted, I studied this a few weeks ago, and maybe it's already spreading out, and this would be one to look at if you see it being used throughout the community. But it mostly was people would, I think you lock up ETH, you mint the LUSD. Something about the system was kind of cool. I don't remember what. But you mint your LUSD, and then you lock it back into itself, and then they're paying you interest. And so it's all within itself. So I don't know. It looks a little, I don't know what the word is for that. It's not a Ponzi, I don't think. But it just was like, I don't know. I don't know. Something about it, I was concerned, so I'm not getting in. It's another new one. I may love it a few months from now, or maybe things have changed even from my last looked at it. Feel free to let me know if you think the thing's great. Is that it? There you have it. Stablecoins earning yield. And this is, so the killer app is an algorithmic stablecoin with no governance that runs on its own, that holds its peg, that can't be regulated, that's all over DeFi, that earns yield in many places, and then you see traditional finance, you see fiat money running to that. That's the killer app. We're not really there yet. All the pieces may exist and we just haven't put it together yet. But this is a very exciting area to watch. And with government regulation coming, there could be fireworks. Let me know what you think. Thanks for watching. See you later.